What is going on, investors? Back again. Time to take a look at Simon Property Group, ticker symbol SPG. We just covered this company not too long ago. I have a few shares. Just want to make that full disclosure. Now, what we saw in the regular session today, the stock was up big. And I think part of it, we'll talk about this press release that they put out, or kind of the rumor that they might be in talks with Amazon for building some fulfillment center in some of the empty spaces they have on their property. But they also just reported earnings as well. And so we'll talk about some of the interesting numbers in here, and we'll go through all of that as well. So after hours, the stock is actually ticking up kind of nicely. Now, the stock does have a dividend. They lowered it a little bit this year, but it's still paying a healthy dividend. It probably doesn't include today's move or even the after hours move, but you're getting $5.20 per share, which is a very nice dividend for this type of company. Now, like I said, they just came out with this was kind of a rumor, but Simon Property Group is in talks with Amazon to transform some of their anchor department stores like JCPenney's and Sears, which we all know are going out of business, and turn them into Amazon fulfillment centers. The reason why Amazon wants to do this is they want to get closer to their customer. And so to do one-day shipping, it's kind of difficult when you have the warehouses way out, on the outskirts of town or in faraway places. Well, if they can get into a mall, that gets them much closer to most of their customers. It also might allow for like pickup at the Amazon location. And so this will be really interesting. If Simon Property is able to do this, it would fill those spaces, which I think would be tough to fill, but it also could transform the mall a little bit. Imagine all these Amazon employees now working there and might have a lunch break and things like that. And maybe you have some pickup options. It might help the malls kind of transform themselves into where they're at now and into the future. So this is definitely driving some of the stock price as well. Now, they just reported earnings. They have 92% occupancy. That's pretty good. Base minimum rent per square foot. Look how overpriced the malls are. $56 a square foot. That's like real estate out in Bel Air. Probably not that cheap, but you get what I mean. That's actually an increase of 2.8% year over year. So, I would imagine going into the next year, you might not see an increase. But boy, $56 a square foot, that's pretty darn good. Now, what they also reported in here was their rent portfolio here. So they collected probably 51% from April to May, 69% for June, and 73% for July. So as we see, things are improving, considering 92% of their properties are open at the current time. Let's jump into the financials. So we've got lease income here. We notice that's down. So we've got the 3 months ended here, 1920. But boy, it's not down by a lot. You'd actually, considering what's going on, considering their malls are essentially closed for a while, this is actually pretty darn good. For 6 months ended here, that's almost flat. It's not quite flat, but it's almost flat though. So we've got total revenue here. Now we've got some expenses here. Now, normally on a normal company, you would factor in a lot of these expenses, but you've got some non-cash stuff here. And typically with REITs and things like that, you analyze it from a different perspective. We'll jump over to the FFO, funds from operations, here in a second. But moving down to the bottom line here, net income, we went from 495 down to 254. But again, some of that is non-cash as well. But it was a rough quarter, obviously, from a net income perspective as well. The balance sheet looks pretty good to me. We see here, we got the investments. Everything looks almost identical. It's ticked up maybe a little bit from the beginning of the year, but nothing is completely out of line here. From a liability side too, everything looks almost identical to where we were in the beginning of the year. We've got some dividends payable here, but other than that, everything looks almost identical year over year. Let's jump to the funds from operations, because that's really how you want to analyze these real estate investment trust companies. So you got 3 months ended here, 1920. You see here, net consolidated income obviously went down quite a bit for the 3-month period, and also to a lesser degree the 6-month period. But what you want to keep in mind, especially because you're buying this for this $5.20 per share dividend, if you're to analyze this company from just an earnings per share basis, it's not really giving you the full story, because this depreciation is not necessarily cash. There's other stuff in here that is, unrealized gains or losses from equity. Some of this, most of this is actually non-cash. And so you get down, we made a net income from a GAAP basis of 290, but if you come down here, funds from operations, you actually made 746. So you really want to compare it that way. So we made about $1 billion, a little over $1 billion in 19 for 3 months. It's down, you'd call that about 25%. You're down to $745 million. And you see for this period, we went from 2.1 billion down to about 1.8, but that's not bad. Considering everything that's going on, it's not bad at all. And so you want to come down here, and now you've got diluted earned income per share down here. And in fact, we'll jump all the way down to diluted FFO per share. So you've got $2.12 here. You got $2.99 for the previous period. We made $6.04 here, and we got $4.90. Again, this $4.90 is for 6 months. So you can almost times this by 2 if you want to give them credit for the rest of the year. That's close to a little over $9 per share. You see here, they're paying $5.20. So they've got plenty of earnings on this company. You see, even in a rough quarter, they made $2.12. You can times that by 4, and they're well over $8 per share. They've got plenty of coverage here, and that's really what you want with these real estate investment trusts, is you want plenty of coverage on this dividend. Now, jumping over the stock chart, we see this stock's actually bouncing around here in after hours. It was up initially, it's down, but it's still holding its gain that it made in the regular session. But we see here, just real briefly, this stock has been in kind of a small defined uptrend, but it is way down from where it was. Obviously, we were up here in this 150, 160 range. I would suggest if you have a significant position that you acquired up in these much higher, at some point, I think you can start to average into this stock as things start to look good. As these Amazon stocks start to heat up, as retailers begin to reopen. It looks like that reopening trade. I saw casino stocks. I saw a lot of stocks that were up today, and it looks like that reopening trade is starting to come into fruition. Okay, I saw stocks like Netflix and Microsoft and Amazon sell off, whereas stocks like Simon Property and a lot of the casino stocks, airline stocks started to tick up. It's not necessarily something that's going to happen all at once, but I think there's going to be some momentum behind these beaten up names. But this stock's in an uptrend. It should have some support down here at the $62, $63 level. I think if you're in here for a much higher level, you can average in a little bit, because if this stock continues this uptrend, there's not a lot holding it back. I mean, we've got very few bars here that is going to hold this stock back. It might take a pit stop up here at the $78 level, and then maybe at 96. But other than that, it's got some green sky ahead of it. So if the malls can kind of come back, if Simon Property is able to fill the Sears and JCPenney's and all the businesses that are going to go out of business, transform the mall to a certain degree, I think this is an interesting stock. Now, would I go all in on this? No, but I think you should have some exposure to the REIT environment, to dividend paying stocks. And this is definitely one from a balance sheet perspective, from a funds from operations perspective. This is a stock that can easily cover its dividend, and it is a leader in the space it's in. Now, it's a risky space. The mall space has been declining for a while, but this is a stock that's been around a really long time, and it's been able to survive for, when everybody thought, look, during all this time, everybody's like, the mall is dead, and this stock rocketed all the way up to $200 per share. And so boom, we're all the way back down here to levels we haven't seen since the last financial crisis. So, and in fact, the chart looks almost identical to the financial crisis. You had these big bars, and then it bottomed out, and it started to once it got in an uptrend, it almost never stopped. It stopped a little bit here, but only briefly. And so I think, not that past performance predicts future performance, but I think we're going to get in an uptrend with this stock, and I think it's going to move up here. I think we've got stops at $80 a share, $90 a share, but if this stock can get some positive momentum behind it, I think it's one that you might want in your portfolio. So there we go. It's not going to be a high flyer. It's not going to go up overnight, but you buy and hold investors, this is an interesting one. I wouldn't go all in on it. If you have $1,000 portfolio, maybe 2 shares, 3 shares max would be how I would allocate on this one. So there we go. That's Simon Property Group. We'll be back again very soon. Hit that subscribe button if you can. We'll see you guys soon.